Good afternoon, everyone, and welcome. 311 day, March 11th, 2026. Trading trends with John Salama here, CMT. Let's get into it. Digestion day, SPY is looking lower. Let's get into the tape here, and I'll show you what we are looking at. Trading's been pretty boring, very defensive. I'm not really sniffing out this tech rally as of yet. So let's get into it exactly to show you what is happening today. Because today what happens is it's a rates move. Higher for longer is the expectation. Fed being stuck with inflation creeping back due to the high energy prices here. People, it's not really a great thing for the consumer in the services economy here when oil is so high. So today, bonds and real estate getting pretty much, I don't want to say crushed, but they're definitely lower. We'll take a look at the charts. And energy, where's the money flowing to today? Energy, dollar, and natural gas. Okay, so it's same old. Pretty much energy and dollar safe haven bid, which of course puts a lid on those metals rally. So let's take a look here. We'll go to the tape. Let me get to the dashboard panel, show you the big movers and all that. Programming note, I'm not sure. I don't really think it's going to make a ton of sense to do a video tomorrow, but I'm not going to be able to do on Friday. So it might be it for the recap. We'll see. I'm going to play it by ear depending on what the market, does and if I'm available, because I'll be on the road on Friday. Okay, so here we go. SPY down marginally, 40 bips. We'll take a look. Q's down 25 after Oracle lifted it single-handedly to being up this morning, but it has reversed. Tesla up 1.5%, Oracle up 8.5%. It was up more earlier, hit 171, and they've been selling that off a bit. I believe it's under VWAP on the day. Micron up 4%. Whenever you see the semis run, they love Micron. I think it's up 370% year over year. Amazon down 1%. That's really about it. CLT we'll take a look at later with the long-term, sister ETF, the VCLT. Like I said, they're getting hammered here. This was actually it popped up today on the turtle short today. Bonds here, I think it's at a support level. We'll take a look at the chart. But bonds here at 1 month lows in your relevant ETFs, TLT, VCLT, etc. So let's get into it. Lower volume day today as well. Absolutely digestion day. No new highs really being made on the 1 month or 3 month scan, like literally nothing. So they're not really forcing their cash into other instruments. This is purely a digestion day, and you're seeing the VIX. We'll take a look at that chart later, but the VIX, like I said, totally digestion. VIX is down today with your indices. Let's take a look at the intraday tape. You had a number this morning. Pretty much everything came in line as expected with the inflation numbers. Here is the open, and really just chopped. There was a big move at 11 a.m. that took SPY down from I'm rounding from 679 to 674. About $5 or just inside of 1%. And it pretty much stayed on the mat there until 12:30 p.m. Eastern time, got to VWAP, equivalent to that 50 RSI, and they said, nah, no thanks. So this market is still fear-driven, even though VIX is down, I understand, but still elevated as VIX just recently put in 3 month highs. It's still a fear market until this war ends. It just, not great things. The emerging market bid has been lost due to the importers having to pay so much more for oil. So there's a lot of flux right now in the world here, and that's why folks are clinging to the dollar. We'll take a look at that chart. But here intraday, your VWAP number to look at is 676.20. Essentially, we're very near the lows, and that's really it for SPY here on the day, down 40 bips. As I zoom out, same thing as I said. I really don't want to play in the SPY playground here for about another. Today's Wednesday through middle of next week. I really don't want to play with SPY, but SPY to me is looking weak here. I don't like what I saw, honestly, as of basically right after the Super Bowl, Valentine's Day week around here. This looks now of a bit of a wall of resistance here at 693. And I know the previous all-time high was right here stuck at 698. We're now getting a bit, about 80 bips lower than that as a pretty fierce wall that we haven't been above since February 12th. I don't like the lower lows here. We've been talking about that very strong support. But look now, look out below. We've had, 4 tags here under 673, what we thought was a cement wall. So overall, structurally, yeah, it looks okay. But as soon as S&P, this mega cap tech game, right, the spenders, instead of the beneficiaries that are going to be getting, the benefits of AI, they're penalizing the S&P, the mega cap, right, the spenders. So when the biggest companies in the world spend 96% of their free cash flow this year, $670 billion on AI, that's going to go to obviously other beneficiaries. And they are the ones that folks are now giving the advantage to buying and putting their investor dollars. But overall, I do not like what I'm seeing from the S&P since clearly since February 27th. And honestly, if you forgive these 2 days, the 25th and 26th, as an oopsie, this market has been really not looking good for 4 weeks. Like truly. So that's something to be said. I have to see that 660 floor hold we were talking about before. Does the S&P get to its 200-day moving average? Look at the game here that's playing catch up on. The 200-day moving average now is at 658. Your low 2 days ago was 662. Okay, inside of $4. So we're getting very, very close. Could it go lower in the next week and tag 658? And that's the flush. We shall see. I don't love the candles that we're having here. Last thing on this, look at the wick here. An easy rejection yesterday. They said, oh, you know what? Someone will buy 683. Nah, no thanks. Next day, they sank it all the way to 673. So be careful. SPY is not the game in town. And due to high energy prices, the whole South Korea, Japan is not the way to trade this market either. So that's what I'm saying. The trading has been, very defensive, not so fun. Let's take a look at what they are bidding up. So yeah, last thing on this, I mean, truly, I think this probably gets very close to tagging 658, 655 even in the next week and a half on some, flushes. Every time Trump says something like, oh, this war is ending very soon, you see the futures pop, and then you'll have, a general or some other news out of the Pentagon say, oh, this could drag on for 6 months, and then you see a flush. So we're still very much in a geopolitical headline-driven market, and not so great in terms of uncertainty for the market, which it hates. So yeah, it needs to see that 660 to hold, and I think it should get very close to about 655 in the next week. The problem is, I think over the next 2 to 3 weeks, the ensuing rally after is going to take you to about that 685, and that's going to be it. So before, how I said, this is important, how I always kept on saying for, I think through the month of Feb, I was saying the market's going to be straddled to that 687, 688 region. And honestly, look at the marker here, 687, 688. It's been basically there since Halloween, since the NASDAQ peaked. But now, what are we saying? Very potentially, unless we get a ceasefire, because if the war ends, everything goes backwards. Everything goes inverted if the war ends, because oil drops. You get a new regime there. Oil, ideally, right, drops with a positive regime here. And then the emerging markets bid comes back. People do buy, again, Japan, South Korea. Those trades are in play, and so on. So everything has to go back to the war here. The 60 floor is to hold. I do think, unfortunately, if you don't get that ceasefire, the next ensuing rally would get you just about to 685, and more range-bound frustration will occur here in SPY. So I don't think this is the trade. I've been saying it. This is not the trade this year. I think it'll probably be a decent year, 12% above average, et cetera, but there's much better globally, of course. That's kind of it. Let's take a look at really what they are buying and selling today. Let's go up first. Energy. It's a multiple sigma mover here, up 2% in the XLE. At the time of my writing, it was up 1.9er. Here it is, 1.8%. Don't forget, XLE hit all-time highs 9 short days ago. That's what you want to see. Look at that. Yesterday, it got down to 200, the 20-day moving average, and boom, today they popped it up 1.8%. That's energy. Still really great. I remember when we had the spaces on the chart report, which, by the way, I'll be on the morning show with JC and Straza on Wednesday morning, the day after St. Patty's. Maybe I'll have a Guinness on the air, although it's 9 a.m., so might look strange. But that's what you want to see at energy. It looks like an oversold buy to me. This is such a strong sector, especially given everything that's going on geopolitically. That was a great time yesterday near those lows, even their VWAP at 55.80 yesterday to buy that energy. Oh, back to the reference I had about the chart report, or the spaces rather. We were talking about energy. When's it going to get going? When's it going to get going? You don't have to babysit positions. All you needed to know was a breakout. This one's a little bit, a little bit interesting, because I always say a breakout above a former area plus overbought. This was truly the signal. This right here, this is just, I know, benefit of hindsight's 2020. But when you got on January 27th overbought plus easily that breakup of the former area, when XLE got above 49.80, off into the races. That was it. So from 50, you had all the evidence there that got you to that $57 high. And like one more thing on this has been over 50 RSI since December 31st. So the 2026 has really been, I don't want to say the year of energy, but this is a great looking sector above 50 RSI. Buyers are in control of energy. That's all you need to know. I don't think they drop it. I mean, obviously, if there's a ceasefire or something like that, this will probably go lower to about $52 easily, maybe even worse. But as this is still occurring overseas, I don't think they're going to let this one drop below 55 even. And my target for the next 2 to 3 weeks on this, excuse me, is $58 for new all-time highs in the XLE. So be positioned for that. XLE looks like it's going to have a decent 2 to 3 weeks. What else is new? I think that was the very minor drawdown. This crazy 8-day decrease from 58 to 55. That was your shot. All right. Also, just really fast in terms of what the portfolio is doing. Like I said, super boring. Still following the Turtles system religiously. I am long Shield, Defense Tech, and we're short Jets, airlines, and regional banks. And we'll get to why I'm very happy with being short Jets. Obviously, it has to do with the massive increase in oil. And Jets being a direct victim. Number 2, big mover today, absolute safe haven. Look at what's happening with the dollar. The dollar up 40 bips. This is the Deutsche Bank dollar ETF. Some folks, of course, look at the Bloomberg, the Dixie. So the dollar peaked pretty much a year ago. I'm looking at a 1-year chart. This peaked last March, okay, at 28.65 and has really been a dog, honestly, for pretty much the whole period, except when, this is interesting, when the NASDAQ, and key, when the NASDAQ peaked on October 29th, that's when the dollar broke out above its still sliding 200-day moving average, where folks were in the dollar up until that Fed meeting on February 19th, and it's been a dog until a week and a half ago since the war. So that's a lot of information. It's a safe haven. They're going to what is the world's technically denomination. Ironically, when this thing was hitting bottom in January, no one really thought that. But when really push comes to shove and there's a major occurrence, think COVID, think the 08 crash, folks obviously go into the US dollar. We're here at the 200-day moving average. The 200-day moving average is absolutely a stalemate. It's not going up. It's not going down. It is stuck at 27.48. We are just about 8 cents or about 35 bips above that mark. The dollar has been above 50 RSI again since February 18th. So you're in this, I don't have to look just at VXX, excuse me, to know about the elevated volatility regime. I can look at this and see that the dollar is the opposite of under pressure. It is getting bids. So that is another point here. This is a tough one. I wouldn't chase it here going into the 200-day moving average, which has been very important resistance. I think this is still going to be tethered. It's going to be a messy one. I think this is still going to be somewhat tethered to 27.25 over the next, 2, 3, 4 weeks. And that is right here where my cursor is. So I still do believe that it's basically almost overreaching here. But understand that these candles here have been like this since the last 8 days. So they are absolutely giving the dollar some play. And it's at 68 RSI. Obviously, if things go really scary, would be a breakout from a former area plus overbought. So that would be here about the 28.5 mark. You'd have to see something really, really scary happen for the dollar to make that move. I don't think it's going to happen. So again, let's see what happens today. VWAP is 27.53. They're above that. It's at high of day right now, the dollar. So be on the lookout for that. And the last one, again, an energy bid. Natural gas up 5%. The only other things that were up big today was Vietnam and Taiwan. So it's a very important part of Asia supplying counterparts there that are getting big bids. I didn't look at them today in the charts because they're just very low volume, not super liquid. So not a ton came to mind. But do look, if you're long Vietnam and the other one I just mentioned, they're having very decent days today. And Taiwan because the semiconductor correlation through Taiwan semi. Okay. Natural gas, here we go, up 4.9%. You've seen this thing, like I said, make widowmakers of us all. It's trying to get to that 200-day moving average again. It is at 55 RSI. It is basically topped out here every time since January 30th when it did that meerkat above the 200-day moving average. So what do we see here? Oh, last thing, I know I'm bouncing around a little bit. The XLE, we're having a good 2-3 weeks. Be careful because of the vol. But you can probably buy, in my opinion, it's going to be super expensive. You could buy the June 35 delta calls. I'd have to check the strike, off the top of my head, like 60, or I don't know, I have to check. But you could probably do that, sell something in March against it, and right size the position, because if there's some kind of news where, the war's over, that is going to go absolutely lopsided. So absolutely protect your position. Or you could just buy the stock XLE. UUP, I don't like it right here. I mean, it's at resistance, and obviously it's UUP, so there's not option trades to do on that. Anyway, let's get into natural gas. Natural gas, a big day today, up 4.9%. I think this was the peak for it, maybe because nat gas, and especially the market, will give you more than you expect. Sometimes all at once, sometimes over time. The 200-day moving average still sliding lower. That ultimate resistance, I like saying that today, is at 1358. The high, though, on the 6th and the 9th were both basically 1326. We're not quite there today, but it's a big day. This one's, I think, plateauing. I don't really love it. Maybe it makes another move. It's a decent move today, of course. I think maybe it makes another move towards 1320. But I think that would be the ceiling for it. And I think this actually does go southward over the next 2 to 3 weeks, maybe towards that $11 handle again. But again, no options trades jumping out at me or anything like that, because liquefied nat gas and everything, in terms of how expensive it's gotten for Europeans and the importer nations like Korea, Japan, etc. It's I don't want to put options position on this, or you can right size it. But honestly, I don't think there's much to do. You can sell the 60 calls or something closest to that, but you're not going to get paid. Not worth it. Okay, losers. This is important. Let's take a look. There's only 2 multiple sigma losers. Okay, and it's a long-term corporate bond, and it's basically all your ETFs in terms of fixed income today. LQD was down, not HYG, TLT. It's more so the long-term bonds. So be aware. This is, of course, very super important. If we get to 510 on the 30-year, something is very broken. The Fed is screwed, and we have issues here at home. So the TLT, as I said, very close to this because of, obviously, look at the low here. Look at this. Bonds are as low as they were Labor Day week on September 2nd. It went lower. The VCLT 74.55 was the low. Today was 74.42, and that puts you right there at July. So bonds, okay, are 8-month lows, higher for longer, which alludes to why we're going to see real estate in the next chart being your biggest loser. Rates soar. Folks aren't going to buy a house when rates are going higher and higher. Where things were positive was the day, it was actually within the 48 hours, that NASDAQ peaked. That's when the bonds were highest in value, lowest rates, usually good for growth companies, a lot of, pre-profitable companies. It benefits that group. Then bonds fell kind of on its times, I would say Christmas Eve, right around there, but it rallied higher, rebounded, consolidated, and resolved higher. That's great. And then it had this, really, for the whole week of February 13th through the 27th, 2 weeks, it was just stuck at 77.40. Really not giving, not gaining, just that was it. And then something happened. Of course, there's a war. 6 days ago, we started now printing and going underneath the 200-day moving average, and we are oversold in bonds for the first time in the VCLT at 28 RSI. You know when that happened last time? Liberation Day, when SPY was at a 52-week low, which is why it's not crazy for me to think, wait, so SPY can absolutely touch its 200-day moving average, which is referencing 657 in SPY. That's easy peasy Japanesey. Konnichiwa. I was going to say Anyang, but that's Korea. I don't like shorting it here, so I went back and forth on this. It probably is not a horrendous, again, a breakdown from a former area plus oversold. They're probably taking it lower. I want to see how this closes. If up on the day is 74.77, it's underneath that. It's basically on its butt here. Now, 1.5% is a bad move for bonds. Rates are shooting higher. See how the dust settles on this. Obviously, there's a lot of concern in the world. I think this does move back towards, honestly, gets right to that 200-day moving average, even a touch above. My level for this is honestly 76.5. So that's one of the reasons why I didn't short it. Still rising 200-day moving average. I do think this gets back to 76.5. It's not going to be linear straight line. It's going to take about 2 to 3 weeks easily. And that is what it looks like in terms of the charts here. But ugly bonds oversold for the first time through the VCLT ETF since Liberation Day. That should make the hair on the back of your neck stand up. And a direct victim of the huge rally in rates real estate, as I said, of course, if you're getting horrendous, much higher rates on a mortgage, you're not likely to buy, which directly hurts this sector. To be honest with you, kind of a similar take, in my opinion, on IYR as the bonds. Not that, the chart looks as ugly, of course. This peaked just 9 short days ago. It's above a rising 200 moving average. Things look much healthier, right? I don't disagree. What I'm saying is I think the real estate sector will base this week. There's a lot of turbulence, but I do think this will be back around 99.5. I don't think this will risk the 200-day moving average and breach it and go underneath. Ugly tape here for the past 9 days, but you're just coming off all-time highs. Nice candle here as well on the 9th, 2 days ago. I liked seeing that hammer. I know everyone was saying, oh, there's hammers all everywhere in the market. Does it mean the bull market's back here again? I'm not so sure. Sometimes in the market, you do have to, let the dust settle sometimes. You can't just be in everywhere. This market right here is all risk management. This isn't just straight being on offense. Like, I guess like Bam Adebayo last night scoring 83 points, I think half of which were free throws. Congrats, Bammy. This over the next 2-3 weeks, similar to like I said about the VCLT, I do think it has it goes higher, tethered to around that 99.5 area. And to be very frank with you, my target for this is right around 102, 103. I think this has new all-time highs in store. So again, hard assets. The name of my LinkedIn newsletter basically is the switch from digital alpha to physical alpha. And what are we saying is going to have a good 2-3 weeks? Energy and real estate. So to be honest with you, this is not a horrible trade, to be honest with you. If you wanted to buy the June 102 calls, I don't think that's a horrible trade. Sentiment's kind of sour on this group. It's not bad. If you want to do it in confidence, do it once this gets to a 50 RSI, or equivalent to a close above 99.5, and that will be your solidifier, your confirmation, if you will, to get to that 103. So I'd almost rather give up the, what is that, 9.5 from here, 98. Give up the $1.50, buy into strength once you get that close. But the chart honestly looks fine. I'm not saying any huge problems here. Today they're giving it to you on sale down 1.2%. Okie dokie. I would almost, considering selling the 96 puts, like going out 2 weeks. That's probably not bad either. Just be careful on the right size of the position. You don't want to get steamrolled picking up pennies. All right, top 3 gainers in the past 5 days. Let's go. The number 1 gainer, although the gains have been halved. Literally, I remember writing this. My date here, or my number rather, for the Monday show was USO up 32% in the past 5 days. You know what it is now? Up 16%, of course, because this candle was a massive, crazy one. And now you see USO up 1.5%. USO, we always look at strengthening trends or weakening. USO up 60% over the past 5 days. That's an average of 3% a day. Today, half that, up 1.5. Seems like half is the term of the day in terms of oil. Right here, of course, geopolitical and headline related, I wouldn't chase this here personally. It looks great in terms of the chart. If you wanted to chase it, I would do 1.5 ATR. The ATR is $7. $14 would be a massive one. So I would do middle and do $10. So if you want to chase it here, go for it. With a 107 entry, if it gets to 97, pull the ripcord, because it's very likely getting to 88. Save yourself the money if you're still long on that thesis. You're still bullish on that thesis, then just get in there. But it is overbought. They're asking, they're buying first, asking questions later. Similar RSI upward trajectory like XLE. So basically 2026, the year of oil and energy, it's been above 50 RSI. Buyers are in control. I just think in terms of the chart, again, this is very event based and there's many catalysts. I just think, and this is similar to when I saw Korea in the chart, and people probably thought I was psychotic. This chart to me looks like it wants to slide down to about $88, $90. That is ridiculous. If you have a give back of about $17, which is what I just said, that's massive, dude. What was that, like 15, 20% on top of the head math? That is going to have a direct positive effect on equities. That's what we're saying. The whole market's kind of like one trade in a way. So the chart for me And that's what people are saying. I think Goldman had a note this morning say there could be a violent upside rally if you get, Iran, the war is over or something happens with Strait of Hormuz open, since the traffic is down 70% there, hence why oil is so much more expensive. But this, to me, in terms of the chart, looks like over the next 2 weeks, this should get to $90. I'm just saying. So by the end of March, USO looks like it should get to 90. But I'm not rushing out here and buying $90 puts. Not selling calls either. Just looking at the charts. That is your number one gainer. The one way that if you want to get into that trade is these candles have to get so much smaller. It can't be up 1.7. I want to see it down, 75 bips, but oil's so volatile, typically doesn't do that. So be careful with that one. Number two, and this is why we're still saying it's a fear market, is VIX, the VXX. Up 12% over the past 5 days. Today it's down 1%. Look at this. Got to the 200-day moving average. 200-day moving averages are so important. Hedge funds look at it. Algos look at it. Sell-side banks look at it. It's not a joke. If you think technicals are, astrology or magic or whatever, I can't help you. But the VXX right here tagged its 200-day moving average on March 9th and got slightly dikembe'd. But what is important to see here is you're having the shorter-term moving averages curl higher. I don't love that. Hence why we're in this elevated environment of volatility. And you're not just rushing out and buying, Core Weave, although I know it's had an awesome day, up 8% or something like that. But it's a very short-term view, but SPY is losing to VXX over the past 5 days just because I think SPY is down, a small 1.5%, 2%, but VIX is up 12% over the past 5 days, but 1 day does not a trend make. I think this is not over very short term. Like I said, if I want to stay away from SPY for the next 1 week or so, 10 days-ish, probably closer to 7-ish, then this is very likely to incline due to its inverse relationship. So this, to me, with the vol expansion, looks like, and if you can't see it, the 200-day moving average is, whoops, screen froze, boopity boppity. The 200-day moving average is 36.22. I think this may want to make another move towards right around 34.5 to 35. I don't think it gets quite that high, but I do think it has a little bit more to go. Probably like another $1 or so, maybe like another 3% jump in volatility. Your second best trade on the board in the past 5 days. And the number three, I'm not going to kick a dead horse on this because we did it earlier, is natural gas, up about 8% over the past 5 days, or an average of about 1 and change percent a day. Today, obviously, trumping that by a lot of 5%. Probably does, as I said before, get a little bit higher towards 13 quarter. Absolute max, I think 1360, and then I would probably sell calls. Top 3 loser the past 5 days. I am short this sucker, and I'm glad I took it. It was basically another way of buying oil, is a way to express that thesis is, okay, so what is going to go down if oil stays up? And of course, airlines do not like paying, $90 a barrel for oil. No bueno. So Jets down 8% over the past 5 days, 1 and change. It's exactly doing that today. I am still short. It's under a rising 200-day moving average. This started entering purgatory 5 days ago. Has been a really good group, though. It peaked February 11th at 31 and change. Let the dust settle. I do foresee me exiting this one somewhat soon. I think this group, it needs news in terms of a ceasefire or oil decrease. So if what I said before comes true and USO does go to $9 and you have a gross reduction in the next 2 to 3 weeks, this group, I really do see it going to $28. And that's a massive jump from $25. That's $3, so more than 10% gain. It's risky. One of the ways that you could play the end of the war, you could be a degenerate on Kalshi and do that, probably market. The other thing you could do is buy the 20. It's going to be expensive. You could buy the 28 calls in June. I would go a couple months, give yourself time, obviously. Hence, if this war, goes to September, you're not just bleeding, hemorrhaging theta. You could sell something against it. But, of course, I would do the 28 calls like June. That might be worth checking. And then you could sell the 27 Marches against it. Not a bad trade. And it is 30 RSI. Last time this group was oversold was Liberation Day. So seeing a lot of – you got to be careful when a lot of consumer related names plus bonds are slipping under the 200-day moving average. They started going higher and then sideways. You want to see how quickly do these names resolve higher or do they break down? That's very important. Very important. So don't trust anyone that thinks they know and they see the entire market in front of them. We are at a very, very key inflection point right here, right now. The number 2 loser of the week is ITB. We were talking about real estate. This is a little bit different. This is the home construction basket, down 7% over the past 5 days, basically doing its average today, down 1.5. You see that? Yes. Okay. Again, what's happening here? Under the 200 moving average. I'm seeing all these similarities. I know this one's correlated to home construction, but you see what I'm talking about. They're consumer-related names. Be careful, as the S&P is as well, and that's even a different kind of a place because the hyperscalers are kind of in the penalty box right now. This to me, similar to what I said for IYR, but this one I do not foresee new all-time highs. The home builders, yeah, that's different. This chart to me is different. You can almost do a pairs trade here. Long XHB. I'm sorry, long IYR, short ITB. Look at the constituents. I'm not going to get into it right here, but like Lennar and KB Homes, it's not a bad trade. I like what I'm seeing in that regard. This looks like it's going to have, I think, wait for the dust to settle. I do think this has, in the next 2 to 3 weeks, this will rally to about that 104 level, but I think that's going to be it. So the 200 moving average stuck at 102. It's still going up 2 pennies a day, so not much. And I do think it recovers and reclaims that in the next 2 to 3 weeks, right around to where my cursor is, right around that 104, and then that 200 moving average at that point will stay stable, if not decline. So the real estate is a better play, the IYR. I'm not loving this ITB chart here. And again, this one's already entered oversold, and it's been since the 200-day got breached. And it was oversold here in November, Thanksgiving week, the week before. So this group's fell on hard times several times, in addition to the Liberation Day. So I'm not loving that one. That's been kicked several times. And last, the third biggest loser of the week, copper miners. So what are we hearing here from the biggest stories of the past week? Airlines going down, that's obvious. Oil ripped 16% in the past 5 days. Home construction, yeah, that makes sense because bonds are on its butt. Rates are, soaring. And then here, copper miners, that's a rejection of the global growth story. That's saying there's no global growth. Okay, this is down 7% over the past 5 days. Today, upping that trend. This group peaked in January 9th when things were all well and fuzzy and great here. And we basically touched $100 here. And now, boom, yesterday or 2 days ago, rather, this touched $76. Crazy. Rising 200 moving average supports back here at $61. Under 50 RSI, going back to for about a week here. Or the copper miners. Oof. Great looking chart overall. Obviously, they haven't really thought about selling this going back to June. Similar to what I said, let the dust settle another day or two. This is your third weakest name in the past week. I don't want to, be a hero immediately. This could get back to $78 again, as it did 2 days ago. Wait for these things that got super overbought to flush and the super oversold things to catch a bid, to let you know that there is a bit of a reversal going on. Right now, I don't see all those signs just yet. Give this a little bit of time. I do think it has maybe a visit to about the $78, $79 handle. And then that would be your invitation to a winning play. I think after that, then it has a 2 to 3 week bounce towards $86. Not looking for new all-time highs in this right away. So some trades stood out there. I like the real estate, ironically. Given what's going on with rates, but I'm just looking at the chart here, which is, kind of what I do best. And that is about it for that. All right, top 3 trades of the past 5 days as we wrap up. Long oil still, long VXX, and short jets. I'm in that one. And that is about it. We will be back maybe tomorrow or, not Friday. I can't do that one, but maybe tomorrow, if not Monday. Good luck out there. Boo!